Larry, good to see you. We're going to tackle the age old topic and something you really like answering. Should you pay your mortgage off early or invest? So, let's say someone has a pile of cash sitting in the bank right now. Perhaps they're invested in a money market earning 5%. Let's talk through whether those safe returns have changed the conventional wisdom when it comes to paying off your mortgage. And you say before you pay it off, you first need to ask yourself whether you need the liquidity.
Absolutely. So again, I have a lot of favorite subjects, Aaron, but this is another one of them.
Right.
Is that from an emotional standpoint or a financial standpoint, we struggle with that a lot. A lot of my clients do.
Yeah.
But if I like the idea of keeping control of your money. But before that, again, if you do pay it off, if something that bothers you, you want to pay that off, you do need to consider: do you have enough liquidity? Otherwise, while the rates are low now, as you mentioned, getting 5% is very legitimate in the bank right now in the money market or CD. But if you have to dip back in, if you end up having an emergency, need some money, you have to pay a lot more money for it. So you got to consider to make sure you have plenty of liquidity if you decide to pay off that mortgage.
Absolutely. Next, you say determine how the returns compare. So you compare the ROI of a mortgage pay down versus investing in the market. And as we take a look at historic 30-year mortgage rates, Larry, how does the equation change if my mortgage is 2% or 8%?
Yeah, it is 2%. It makes it a lot easier, right? I mean, if
Yeah.
you got a 2-3% mortgage and you're making 5% or more just in a money market, and there's some other instruments that make much more during this time, it's just a pretty easy conversation as long as you get through the emotional part. At 7%, many would be saying, well, wait a minute, now I'm at a 7% mortgage, then it makes it a lot harder. I don't want to get 5 if I'm paying 7. Now, I will tell you, I still like to play with the numbers on that, Aaron, that if you're getting compound interest on your gains, so each year you're getting that 5% on top of money. So it's growing at a compound, but your mortgage, you're paying 7% on a declining scale. It still doesn't take a long time to maybe 5 to 7 years before you're now back into the black. And many
Mhm.
of us also believe that with the mortgage industry, rates can't stay this high forever. You're almost
Yeah.
renting that rate so that you're probably going to be able to refinance in a few years. So there's still a very good conversation needs to be had, and a lot of pen to paper had conversations around that.
Right. Right. So you mentioned the magic of compound interest, which brings us to the next question. You need to factor in your life stage. In other words, how long is your time horizon?
Yeah, that's the $1 million question, right? I mean, I've told people I could give them the perfect plan. They tell me when they're going to die, right? So,
Right.
and on their health, many people is not as healthy. So I like the idea, there's a 3 phases called the go-go years, the slow-go years, and the no-go years. You age into place. So it's like maybe you need to have a little bit more control and flexibility with that mortgage the first 10 years, 15 years, 20 years. A little later in life, maybe we choose to pay that off. But certainly that's a big part of it, of what life stage you're in, and making sure you're comfortable. As again, the biggest deterrent right now is really more of the emotional conversation of should I have my mortgage paid off. A lot of
Mhm.
that's where people have been told that, though. When they see the math behind it, many people are compelled to where I can see where I never want to pay that off. So again, it really is an individual decision.
Right, of course. And you can't make this decision without factoring in tax implications.
Absolutely. So again, the very big piece there again on what the tax is going to cost you, right? So, but most of us now have a standard deduction that we do not get to include the mortgage interest along the way.
Right.
So that's really not much of a consideration anymore. And if you have the higher income to where that, or lower income where that would be, where you got enough deductions in there, I still don't think most of the time that will matter. I think it really gets down to that personal conversation and what you're going to be doing with your money.
And Larry, what if somebody asked you if they should pull money out of their IRA to pay off their mortgage?
That's the scariest thing for me because people
Yeah.
do not think about that, whether it's for their mortgage or for their car. I want to buy a car. I don't want a car payment. They don't realize that that 3% mortgage, or even a day's rate of a 7% mortgage, you're probably going to pay 22 to 30% interest taxes on that money coming out. Mathematically, it's a worse decision. But
Mhm.
once they ask that question and they see the math, I've not had anybody to make that decision once they realized that a 7% interest rate on a car or on the mortgage was a deal.
Yeah, exactly. And so then last and perhaps most importantly, you need to ask yourself if paying off your mortgage will bring peace of mind. As you keep saying, the numbers may say one thing, but your heart may say something else.
I've got a lot of very intelligent people. A CPA that I'm very fond of that I work with a lot is Obviously, from a number standpoint, they get it. But it's that peace of mind, especially if they have any kind of health issues or anything where they're thinking, hey, I want to make sure my wife, kids, it really is like 100% emotional, not at all a financial decision, more of emotional. So look, there's so much that goes into that though, Aaron, that you really need to speak with someone and crunch the numbers and see what other alternatives are. That truly, in most cases, I believe that most people would be deterred to say, I think I'll make a different decision now that I know all
Mm-hmm.
the things that we can do around that. Unless you're like my mama at 84 years old, she's not going to have a mortgage regardless of the return. So,
Right.
yeah, we do get that. We do understand there's going to be those
Mhm.
situations.
There is no cookie cutter answer, Larry. So if somebody wants to have that conversation with you, how can they reach you?
They could give us a call at the office, which is area code 615, number 216-1048, or they could email us at info@sfawealth.com.
Perfect. Larry, thank you.
Thank you, Aaron.